Ever since the MMT started in the beginning of 2023, I introduced people to candle signs. These here are a few results from that. I even showed that you can get funded just purely using candle signs. Before we do anything, let me just warn you, candle signs is not for the weak. This is extremely advanced stuff. But once you understand it, a whole new world opens up to you. So how can we make sure that you understand this advanced stuff named candle signs? Well, there's 3 steps. First step, PD raise. Second step, respect versus disrespect. Third and final step is the story. Now, before diving into step 1, to understand candle signs fully, we need the origin story of how I actually got to candle signs. And that was purely based off of fair value gaps. I was always fascinated by fair value gaps, and to this day, I still am. Now, as with any other person, I thought fair value gaps were just a standalone concept, meaning there's nothing more to it. It's just a 3-candle pattern. But once I started to take fair value gaps more serious and I started studying them in the chart, I actually found out that they are the basis of any concept that you can think of. So imagine you walk through one door thinking it's just one simple door, and behind that door, there's a whole new world of doors with a lot of opportunities. And one of those doors is candle signs. Now, candle signs is reading and understanding what happens in a singular candle. And based on that singular candle, we can understand what the next candle and candles will do. So what do these fair value gaps then have to do with anything? And why did I start the story off with fair value gaps? Because when we look at a singular candle, you at the same moment in time are looking at a lot of fair value gaps. Why? Well, if we take this daily candle right here and we go down into the 15-minute time frame, then on the 15-minute time frame, we see all of a sudden a lot of fair value gaps, where on the daily, we only saw one singular candle. So instead of trying to read and understand what all these different 15-minute fair value gaps want to tell us, we can just simply look at one singular candle. So why and how can this even be useful? Well, that's where the 3 steps come in. Where the first step is understanding PD raise. Candle signs on its own can be quite confusing, so we want to combine it with PD raise. Now, for simplicity's sake, we're going to combine it with 3 PD raise in this video. Where the first PD raise is, of course, you guessed it, fair value gaps. The second one is swing points, so swing highs and swing lows. The third one is previous candle high and previous candle low. These PD raise can be used to trade from and can be used as a target. And then candle signs will constantly guide us and will tell us what the next target is. So what the next PD ray is that we are moving towards. So before we move on, and you can do this with me, if you mark out every single PD ray on your chart, doesn't really matter what time frame it is, as long as you mark out every single PD ray that we just mentioned, the 3 PD rays, then you will see that price is slowly starting to tell you a certain story. So here we have this swing high. Then here we have this fair value gap as well right there. We have this swing low. We have this fair value gap right there. Then we have this swing high sitting right there as well. This fair value gap and this swing high right there. Now, previous candle highs, previous candle lows, I did not mark them out right now because the chart already in itself with just swing points and fair value gaps is already quite full. There's a lot of things going on in the chart. Previous candle highs, previous candle lows, they will come in handy later on. But if we now focus just on these swing points and fair value gaps, then we can see how candle signs is trying to guide us towards the next target. So how can we actually know that? Well, that's where step 2 comes in. We understand in step 1 the PD raise. Step 2 is about respect versus disrespect. With candle signs, we can do one of 2 things, respect and disrespect. The first thing that we're going to discuss is respect. When we talk about respecting a PD ray, we are mainly talking about we are wicking the PD ray. And let me explain why. If we first focus on just these 2 PD rays right here, this swing high towards the left and this fair value gap right there, then in both scenarios you can see once we come above that swing high, we only have a wick above that swing high. And in this fair value gap right there, we only have a wick into that fair value gap. When that is the case, we are respecting that PD ray, meaning we can continue lower off of this premium ray and we can continue higher off of that discount ray towards the next PD ray, towards the next target. So we can continue in the direction of the respect. The respect here is bearish, respect there is bullish, towards the next PD ray. And why? what happened there? Well, if we take a look at this swing high, what actually happened in that candle? We first open up right there, then we continued higher for a little bit. So price was at that moment in time at that high, and then it came back down. So there's a wick created. The same at the bottom right there. We first continue lower, we open up, continue lower, and then when we continue lower, all of a sudden we continued higher again right there. Now that is all very logical, but remember what we said. When we look at one singular candle, we are at the same moment in time looking at multiple fair value gaps. Because on the lower time frame, what happens right there? Well, we first get a move lower like this right there, and then we get a move higher. And on the lower time frame, that will be seen through fair value gaps that we have in that leg. And the same for that pre-ray right there. We first continued higher, creating fair value gaps on the lower time frame right there. And all of a sudden, we create this reversal, creating fair value gaps going lower right now on the lower time frame, which is then seen through those wicks right there on the higher time frame candles. So when looking at the PD rays, we can see what happens when we start to respect them. We move in the direction of the respect. This fair value gap right there, that fair value gap, this swing high as well. But that is only the first part, because that's respecting. But we also had the opposite thing, which is disrespecting. When we are disrespecting, we're not wicking. We have a body close inside the PD ray. So again, the body is, if we take away the wicks, that is the body. It's the bigger part of that candle. So if we take a look at this swing low sitting right there, then we see we disrespect that. Why? Because what actually happened right there? Well, in that singular candle, we again see multiple fair value gaps, but it's a different story than that wick story. Because in the wick story, if we take that bullish candle, we saw something like this. Where if we have a disrespect candle, we only see something like this. We never get that reversal to all of a sudden continue higher. So that means we're not respecting it. The fair value gaps on the lower time frame are just continuing lower. So when we create a disrespect candle like this, then we can understand we can continue in the direction of that disrespect. So in this case, we are disrespecting this swing low right there, meaning we can reach for a lower PD ray in the form of this PD ray right there to then seeing if we want to respect that. Disrespect is either a close below a swing low, or a close above a swing high, or a close inside a fair value gap. Again, there's an exception to that rule, and that is previous candle high, previous candle low. Because let's say we have a swing low like this, for example, why, if we disrespect it, we still continue higher afterwards? Well, the first candle that reached below this swing low right there and actually closed below the swing low. So we could assume it wants to continue lower, right? Well, if during that candle right there, we close very low below that swing low, meaning we don't have a long wick, then we still need to take into account the previous candle low that we have right there, which we can continue higher from. This is something, if you start studying this is what we use a lot in the MMT, you'll start seeing it everywhere. So let me explain why that even happens, why we have that sweep at the previous candle low, and why that still counts. That is because during this candle close right there, we come below this low very late during that day. Meaning, during the same day formation, we don't have the time anymore to actually create that rejection, create that reversal, start respecting that swing low to then continue higher. So what happens is price consolidates a little bit, then use the previous candle low, also liquidity, to sweep it to then continue higher, which is something that you'll see here, for example, as well, which also happened with this swing high towards the left right there. When you have a high close in, for example, a swing high right there, then that means during that candle formation, the first candle, it didn't have time to reject. So it uses the previous candle high right there to then continue lower. Because what is a previous candle high on the lower time frame? A swing high. So that wick right there that happens above that previous candle high, that is on the lower time frame a sweep with fair value gaps like this on the lower time frame. So we're reading a lower time frame story by just looking at singular candles, and that's the beauty of it. And step number 1 was understanding those PD rays. Step number 2, respect versus disrespect. We understand those different type of candles and what happens underneath. So if you did step 1 and step 2 on your own chart with me, you will now see that price is trying to tell you a story. But you first have to understand the language, which is candle signs. So what exactly is price trying to tell us, and how can we now capitalize on it? This is where step number 3, the story, comes in. And in the story, we first need to understand that in trading, we are always moving towards a next PD ray. So we're always moving from PD ray to PD ray to PD ray to PD ray. That is always going to be the target. Our job as traders is to find out towards which PD ray is price heading next. And we don't need to know that every single trading day. But I always mention in the MMT, there are going to be certain days where price is going to be so stupidly obvious that my 4-year-old niece could see where price is headed next. Now, those are the days that we want to capitalize on it. So again, not every single day, but the days that are extremely clear. And that creates a story. When we talk about those clear targets and those clear drawn liquidities, again, I'm mainly talking about swing highs and fair value gaps. Those previous candle highs, previous candle lows, yes, we still need them to understand the overall story, but they're not the main targets. If we go up in monthly, you can use them as a main target, for example, because they're going to be further than just a daily previous day low, previous day high. But the longer term targets, fair value gaps and swing points. So if we now create the story, understanding those steps, then here we see we have this swing high right there, which previously was quite a clear target. And that's exactly what we're looking for. And afterwards, after reaching this swing high, can we now continue higher? Well, first we have to understand right here that we are respecting this swing high, meaning we can continue in the direction of the respect. The respect right there is bearish, so we can continue lower a little bit. Well, what can it continue lower towards? Well, what do we have? We have this fair value gap right there. Again, when you mark out all those PD rays, this is something I used to do when I learned about trading. Just simply mark out every single PD ray. And that way you can see the price is constantly ping-ponging between those PD rays. And it tells you a certain story. You just have to understand the language to read the story. Then right here, it's very logical that we ping-pong from the swing high right there to then back to the fair value gap. Because that's the next PD ray that I can reach for. And candle signs is telling us that. So once we reach for that daily fair value gap right there, then what do we do? Well, here we also respect the daily fair value gap. So we could continue higher with a potential target that we have now also added, that swing high right there. Keep in mind right here, the previous candle high. Because once we reach above that previous candle high right there, and you can just adjust, right? You just react at that moment in time. You don't have to know at that moment in time that we are going to reach that swing high. No, as soon as you see this down candle respecting that previous candle high right there, what does that tell you? Well, if we were bullish, what should have happened? Off a previous fair value gap, and this is extremely advanced, off of a previous fair value gap, what is supposed to happen? What are the next few candles supposed to do? Create a new fair value gap. So I mentioned this so many times. A fair value gap should always create a new fair value gap. If that doesn't happen, then the fair value gap low right there and the low that we created in the fair value gap actually becomes the target. So here we are clearly not creating an expansion phase candle higher right there to actually create that new fair value gap higher. Such a small detail, but the beauty and the secrets are truly in the basics. So here, what are we now doing? We're sweeping that previous day high. We are not creating a new fair value gap of the previous fair value gap. So from this close of that candle towards this next discount array right there, and potentially even that fair value gap, if we disrespect the swing low, that is the next target. And these are days right here where, again, the drawn liquidity is just simply quite obvious that we can capitalize on that in the lower time frame. Here we see the same thing. We come into that fair value gap right there. First day, do we see a big rejection? Somewhat of a big rejection. Second day right there, we continue higher. So what kind of premium rate can it now reach for? Well, we have all these previous day highs right there, but we've also now left behind this swing high right there, which on the lower time frame, again, we can capitalize on that. Funny thing about candle signs, you don't even need a lower time frame, because if you understand a singular daily candle, then just the daily time frame can be your bias, your narrative, your entry, all in one. Then reaching that swing high, what do? Well, we respect it. So what is a logical next target? We can potentially reach for this discount rate. It's the only discount rate that we have right there. Again, those previous candle highs, previous candle lows, they come in very handy to understand what the closer targets are and if we are still going to respect a certain PD rate. Like we mentioned, longer term targets, swing points, and fair value gaps. Now, at this moment in time, we actually, at that swing low, have also created, funny enough, a weekly fair value gap sitting right there. And see what happens on the weekly. On the weekly time frame, we now have created this weekly fair value gap. And we also, by coincidence, funny enough, we also respect that swing high right there with that candle to then retrace back into it, to then potentially continue higher off of towards the next target, that weekly swing high that we have left behind as well. So on the daily, if we continue right here and we deliver into that weekly fair value gap right there, previous candle low sweep right there, that is where those previous candle lows, previous candle highs are important to understand. Then remember that we are coming off of a weekly fair value gap and we have a daily fair value gap going against us right there. So what is stronger, a weekly fair value gap or a daily fair value gap? The weekly fair value gap is always going to be stronger because it's on the higher time frame. It's above the daily. So the probabilities are already in our favor that we are actually going to continue higher. Gets confirmed with the nice rejection right there. Afterwards, we see somewhat of a rejection of the daily fair value gap by this long wick that we have right there. So if we now go down in time frames and see how we can capitalize on it with the proper confirmation, then we can go down to the 4 hour right now. And on the 4 hour, again, we see the big rejection off of the daily fair value gap right there. But we also leave behind this 4 hour fair value gap sitting right there, which we can again potentially continue higher from. So once we sting into this 4 hour fair value gap, what do we see? We start respecting it to then again continue higher. Keep in mind the overall higher time frame target that you had. The original target that we had was still this weekly swing high right there. So the lower time frame, all that we're looking at is for the lower time frame to align with the idea of going higher. So on the lower time frame, we can do the exact same thing. We can mark out all those PD rates and see, well, what are we reaching for next? And on the 4 hour, we saw this 4 hour value gap getting respected, to then the swing high right there, to then those swing highs right there. And on the 1 hour, we can do the exact same. We have this 4 hour value gap right there. We have this 1 hour fair value gap sitting right there as well. We also create this 1 hour value gap, which we actually do not have a sting back into. We first could argue we are respecting this bearish 1 hour value gap, but then afterwards we continue higher, potentially reaching for these swing highs, afterwards these swing highs, and our higher time frame target that we still had, the weekly swing high right there. So all we need to find is off of these fair value gaps, a new fair value gap. And once you have that new fair value gap, that is your sign to take an entry right there. And you can even go crazier with this, because if we now go into the 15-minute and we again do the same thing, we have all those different PD rays, then we'll see that we are constantly respecting those bullish PD rays to then continue higher off of. And the entry here is the least of your concern. Buy on any candle right there and you'll probably be fine. The most important part was understanding that candle signs on the higher time frame. And that's arguably also the most difficult part. Now, this is now even stronger if you now combine it with the understanding of this fair value area right here that we had on Euro US dollar, to understand why it actually continued lower right there and not continued higher. This is exactly what the previous video touches on. So you can go ahead and watch that after this one. Now, my advice, start doing case studies on candle signs, start seeing it over and over and over. For example, start seeing how this situation currently on Euro US dollar plays out right there. We have this fair value gap right there. And what are we doing? Are we creating a long wick or are we creating that body closure right there? That's important. And then see what the next few candles right there want to do based on that candle. Stick to this understanding for years to come. Start building on it through, again, your own studying, and the money will come in sooner or later. All right, perfect. Thank you.